Hey, XRP community, Leo here. On November 27th, 2025, XRP's price stands at $2.22, with exchange reserves on platforms like Binance hitting the lowest levels of the year at around 2.7 billion tokens, a 10% decline since early October. This comes alongside reports of over $35 million in net inflows to XRP spot ETFs on November 25th, contributing to a total assets under management exceeding $650 million across multiple funds. In the next 10 minutes, I'll analyze these on-chain trends and recent discussions to examine potential supply dynamics. This is factual analysis based on available data, not financial advice. Conduct your own research before making decisions. To set the stage, let's examine the core data points fueling current conversations. On-chain trackers indicate that major exchanges have seen XRP reserves drop significantly. For instance, Binance's holdings fell by over 300 million XRP since October, reflecting a shift toward private custody solutions. This pattern aligns with the rollout of 6 spot XRP ETFs earlier this month, which have recorded consistent inflows without outflows, unlike some peers, such as Solana ETFs that posted negative flows. A post from @Chad Steengraber highlights this. From day one, XRP ETFs haven't shown a single outflow. Meanwhile, even Sol posted negative $8 million in outflows. The difference is clear. Real demand is flowing into XRP consistently, day after day. Yesterday's ETF inflows alone equated to approximately 80 million XRP removed from circulating liquidity, based on average pricing. This reserve depletion isn't isolated. Broader exchange data shows a $640 million drop in XRP holdings across top platforms, as noted in analyses from sources like CoinGape. Their recent update states, XRP supply on exchanges is crashing as institutional demand spikes. ETF inflows are rising fast, tightening supply and raising concerns of future scarcity. With XRP's total circulating supply estimated at around 56 billion tokens, after accounting for escrows and burns, the effective tradable supply on public markets is narrowing. Daily trading volume remains robust at over $4 billion, but as tokens move to ETF wrappers and institutional vaults, the liquidity pool for spot trades contracts. Projections from market observers suggest that with 9 additional ETFs launching this week, up to 1 billion XRP could be absorbed by year-end, potentially reducing available supply by 1.5% or more. Regulatory developments provide additional context for this trend. The Clarity Act, advancing to Senate markup in December, proposes classifying XRP as a digital commodity under CFTC jurisdiction, which could further encourage institutional participation by clarifying oversight. This builds on the resolution of prior SEC challenges, reducing uncertainty. Complementing this, Ripple's RLUSD stablecoin has reached $1.2 billion in circulation, with recent approvals in Abu Dhabi for use in institutional lending and collateral. These integrations position XRP within efficient cross-border settlement frameworks, where its low-cost, high-speed transactions on the XRPL offer advantages over legacy systems like SWIFT. Geographic demand patterns underscore the momentum. In South Korea, Upbit's XRP KRW pair recorded $312 million in volume yesterday, surpassing Bitcoin for the first time in months and contributing to daily regional flows of $400 million, an 18% increase. This kimchi premium indicates heightened interest in assets with strong utility for high-frequency trading. Globally, ETF flows on November 25th included $35.41 million for XRP, alongside positives for BTC, ETH, and SOL, suggesting a broader institutional basket approach rather than isolated bets. As Cointelegraph reported, broad spot ETF inflows across BTC, ETH, SOL, and XRP show this isn't a single asset story anymore. It's a full crypto basket trade for institutions. Price action reflects these undercurrents. XRP has climbed 1.4% in the recent session to $2.22, testing mid-range resistance at $2.35, with $15 million in short positions liquidated. Open interest increased by 12%, signaling growing leverage and momentum. A Crypto.news analysis notes, XRP price presses into mid-range resistance as Binance supply drops to lowest level of 2025. This V-shaped recovery follows ETF catalysts, with steady institutional buying evident in volume metrics. 117.7 million units traded in the latest session. Now, to deepen the analysis, consider the mechanics of ETF sourcing. Fund managers are restricted from direct purchases from Ripple's escrow due to regulatory injunctions, compelling open market or OTC acquisitions. A detailed post from @Pumpius explains, ETF fund managers are legally forbidden from buying XRP directly from Ripple or escrow. Every single ETF must acquire XRP on the open market only, no shortcuts, no backdoor deals. This is the most bullish setup imaginable, because Ripple will only release what it absolutely needs from monthly escrow. With over-the-counter liquidity estimated at 1 to 2 billion XRP, already partially depleted by 800 million in the first ETF week, public order books could face pressure as demand escalates. Jake Claver's insights, referenced in multiple discussions, warn that when OTC dries up, price discovery shifts to transparent venues, amplifying supply constraints. Escrow dynamics add another layer. Ripple's monthly releases are capped at 1 billion XRP, but historical data shows 80% re-escrowed or directed to ecosystem uses, resulting in net stability or reduction. Combined with burns and ODL usage, this controlled mechanism prevents floods while ETF absorption accelerates the squeeze. As Versan Aljara observes in an earlier thread, the circulating supply of XRP is actually far smaller than most people think once you remove escrow and institutional holdings. Once demand from tokenized debt, gold, and stablecoins hits XRP, circulating supply could collapse overnight. Addressing potential counterpoints ensures a balanced view. One common observation is that ETF buys via OTC might not immediately impact spot prices, as they bypass public exchanges. However, as pools deplete, potentially in 9 to 27 days per some estimates, institutions must turn to lit markets, where retail liquidity is thinner. A reply to @Pumpius captures skepticism. And when those XRP are sold, then what? No upside at all for the ETF buys through OTC sales, but when they are sold causing the ETF price to fall below the NAV, you are fucked. Valid concern, but historical ETF data for BTC and ETH shows sustained inflows lead to net accumulation, with redemptions rare in bull phases. XRP's utility edge, settling $2.1 trillion in test flows recently, may anchor long-term holding. Another point, regulatory risks linger despite progress. While clarity advances, full implementation isn't guaranteed until mid-2026. Yet current ETF approvals from firms like Franklin Templeton, holding 34 million XRP in one fund alone, demonstrate comfort levels rising. Stavexerpliono2 notes, Franklin Templeton just shocked the market by launching the Franklin XRP ETF on NYSE Arca, calling XRP fundamental to the global settlement system. BlackRock remains sidelined, citing demand focus on BTC/ETH, but a shift could inject billions. For macro ties, Fed signals matter. PPI at plus 2.4% year-over-year, balance sheet runoff slowing to $25 billion monthly, and claims at 213,000 point to $5 trillion in potential liquidity injection, favoring risk assets. XRP Phoenix, simulated from trends, aligns. Tracer nailed the cuts. PPI at plus 2.4% year-over-year, balance sheet runoff slows to $25 billion per month, claims at 213,000, that's $5 trillion, liquidity flood incoming. XRPL's ISO 2022 compliance positions it for tokenized assets, with MasterCard's Q1 2026 pilot for instant settlements adding throughput potential. What if trends intensify? If inflows average $100 million daily this week, as seen with Bitwise and Grayscale, a further 500 million XRP could lock up via new funds like 21 shares. Paired with RLUSD's expansion, this could elevate XRP's role in bridging stablecoin and real-world asset flows. Conservative modeling, based on current velocity and supply math, implies testing $2.68, then $3 if $2.35 breaks, though volatility remains inherent. As at IMCrypt Opus states, XRP reserve drop signals institutions tightening. Buying pressure is mounting. In recap, exchange reserves at 2025 lows, ETF AUM over $650 million, with 35 million recent inflows, regulatory clarity via Clarity, RLUSD at $1.2 billion, Korean volume spikes to $400 million daily, and price at $2.22 with bullish indicators, all converge on tightening supply dynamics. Track via CoinGecko, Sentiment, or direct on-chain sources for verification. If this breakdown provides value, like the video, comment your take on XRP reserve trends, subscribe for ongoing analysis, and share within the community. Thanks for watching. Leo out.